Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry. Today is Tuesday, May the 3rd, and the time is around 1:30 a.m. GMT. So today we are looking at the chart of the Canadian dollar yen here. This is a 45 minutes chart. We can see it has ended with 1. This is the primary degree here at 103, and then we are now looking for the wave 2 pullback, and the wave 2 subdivides into a zigzag ABC. We can see the A ended here as a 5 waves, 1 2 3 4 5, ended with A in the intermediate degree, and then B ended here as a zigzag ABC. So now we are looking for the select on the downside. We seem to have ended 1 2 3 4 5, and now looking for a 3 ways rally to finish this wave 2 here, wave 2 of C, before going down again in the 3 of C, 4 of C, 5 of C to finish the C leg as a 5 waves. And then once we finish the C leg, we should be also finishing the 2 over here below. Okay, so this is simply just suggesting that we should see for the downside as long as we don't break above this 103 right here. And even this B is sufficient here. I mean, if it breaks above this B, most likely it's going to break above 103 as well. So as long as it doesn't break above 102.46, we are looking for the downside. Now, zooming out to get an idea where we are, let's put in this wave 1. If I look at the daily time frame, this is your wave 1 here, and it ended with 5 in the intermediate degree here. 5 of 1 is here, and then this is your A, right? This is your A according to the 1 hour chart. This is your A, and then this is your B, the rally over here. So what this means then is we are looking for possibly a C leg to finish the wave 2, right, before going up again. Now, if you look at the 1 hour and you don't understand the larger degree, you only see, okay, looking down, okay, it's bearish, right? But actually, if you understand the concept of multi time frame analysis, then you know that if you upgrade and the way the count is being presented, this is obviously bullish, right? The trend is bullish because if this is wave 2, this is nothing more than just a correction, and a correction, as you know, may or may not always extend as much as you want, right? And it can always continue to extend in the direction of the trend. So the trend is always the key, and to understand what the higher degree trend is very, very important. Instead of just looking at one time frame and then decides all your decision in trading in the just a 45 minutes or 5 minutes time frame, right? All right, so in the daily time frame, it is obviously bullish. You can just see it. It continues to make a high and so on, and now looking for possibly a 3 pullback. If we assume it can really go down, then this means we should be looking for support when it hit the 100% extension. So we're looking for support somewhere around 98.5, 96.1, and then from this area here we can expect the pullback to complete, and then the pair to continue higher again. So let's take a look and talk about a couple of other options. Right, so first of all, if we are counting this as a 5 of 1, so then what we want to know is, what is this wave 2 here correcting, right? Which cycle is this wave 2 correcting? Now, if this is your 5, then you can say this is your 3, this is your 4, and then perhaps this is your 1 and 2 here, right? Something like that. So then that means we are talking about a correction that started from we're talking about a cycle that started from this low here, December 2021, right? So from that December 2021, you got 1 2 3 4 5, ended with 1, and now we are correcting this rally from last year, from December 2021, in a bigger three waves. So it's as simple as that. So once that correction is completed, we can extend higher again to continue the bullish trend, right? And what could go wrong, right? What could go wrong? Well, if it goes wrong, that means we rally higher instead of going down, right? So that's what could go wrong. Now I think one possibility I can think about, uh, in which we don't see another leg down, right? Even though even though that's the primary view is calling for another leg down, but I could, for example, label it this way. Now as you know, the internal of a wave 3 should be in the lower degree, 1 2 3 4 5. So this should be in the minor degree, so I could label it this way. Actually, this is your 1 2. Now instead of 3 4 5 somewhere here, that could be a 3, that could be a 4, that could be a 5, and this could be a 3 right here. So instead of 5 of 1, that peak over here, this could have been a wave 3 here, right? This could have been a wave 3, and this could have been a wave 4. If that's the case, right, if that's the case, you're not gonna get that move. So then what you're gonna get, probably something like this, and extend higher again like this as a 5 waves, right? 1 2 3 4 5. To finish 5 of 1 before you got a bigger pullback, right? So that is one alternate we can think about, that it could be doing something like that. But overall though, with the market right now in a risk off mode, as you know, indices selling off and so on, it is possible, if the indices continue to extend on the downside, then the yen, typically it correlates pretty well with the indices, they can also start to pull back, and therefore another leg down cannot completely be ruled out here to complete this 3 pullback before the next leg up. But you can see that the yen pairs has been holding up very well, comparatively speaking, if you compare this with the Nasdaq or the high tech, which has been completely decimated, right, in the first 3 months this year. So yeah, it looks very strong overall, even with a risk of sell-off in the market, and looking for simple 3 pullback for now, as long as we don't break above 102.96. But if we break above it, then basically that should be still within the same cycle, and this is going to be in the alternate count here before we got a bigger with the pullback, right, and then higher again. Okay, so that's where we are with the market. But overall, yen pairs continue to be bullish. We continue to be actually favoring the upside. Even if we are calling for another leg down, doesn't mean we're like selling it, right? We're still favoring the upside, because the larger time frame clearly is bullish and calling for better to buy in the dips rather than trying to pick the top and sell, sell at the top. Okay, so that's it for today's chart of the day. As always, if you do want to get regular updates on Forex, commodities, indices, stocks, ETF, we do have 14 days trial. We are also running a promotion still. I think this week is going to be the last week to get a 2-for-1 promotion, and the link is provided in the description of the video. Okay, so I'll see you all again next time. Have a nice day, everyone.